Hello everyone and welcome back to another video. Thank you so much for joining me and thank you for subscribing if you have, and if you have not, please do consider subscribing. The more I see people subscribe, the more videos I make, and I truly appreciate it. Thank you so much. Now let's get into this video, which is all on Netflix. So Netflix is listed as a moderate buy with 23 buy ratings, 7 hold, and 3 sell out of 33 total ratings. As of the close on September 13th, 2021, Netflix was at $589.29, which it's only about a 4% upside from where they see the stock going as an average in 2022. Now, with that being said, let's look at the smart score, and it's a 7. So again, that's not bad. 7 is usually where I start to consider stocks. 7 and above is pretty good. 7 is definitely where you want to be, and Netflix is definitely a bullish stock if you look at the technicals and the fundamentals. I look at the fundamentals specifically, so let's look at the income statement first. So clearly Netflix in the last, 5 years, over the previous 5 years, has grown from about 6.7 billion in revenue to 20, let's just call it 25. So 6.7 to 25. Holy crap, look at that. That is huge. That is such huge growth to have basically some steady growth every single year. And Netflix is only going to get bigger. They've released a store where you can buy merchandise from some of the different shows that they produce. I don't know what the percentage is, what they produce versus what they buy and what they license for movies and TV shows, but they're getting really good at the stuff that they make. They're, winning. I think they've won an Oscar or two, or at least they've been nominated for a few of their films, so that's really great to see as well. If we look at the net income, Netflix is profitable and has been profitable for a while. They just hit 2.7 billion, which is nothing to sneeze at. They've consistently, as they've grown revenue, they've grown profits too, which is really good. That means that they have someone in charge that really knows what they're doing, and they're really trying to actually grow the business. And if we look at the balance sheet, we can see that again, they have a good CFO because they've grown from about 1.8 billion in 2015 to 8.2 billion in 2020. That's really what you want to see. And total current assets is about 9.7 billion, while total current liabilities is 7.8, meaning they have good working capital and they can definitely meet current needs when they need to, which is a really good thing to see because that means that if anything were to happen, they are able to meet their obligations. If we look at their total long-term debt, it's at about 18 billion. That's not what you want to see. I don't really understand why it's so high. Netflix, I'm not sure what the margins are on making movies specifically, like if you really dug into it, but 18 billion is really high. I don't really see the point in that, and they don't have enough cash to take that away, so they're not going to be able to pay that down anytime soon substantially. They still have more assets than liabilities overall, but still, I don't really understand the need for such high long-term debt. And if we look at the cash flow statement, yes, they are cash flow positive, or they start out with a net income, so that starts them out on a good foot. And we can see that they have issued long-term debt, but they've not made any repayments. Again, this is kind of dumb. I really hope that their CFO starts to make some payments. This is kind of stupid that they just, continuously rack up debt year over year, and yet they don't pay any of it down. I mean, that's negligible, and that's not very good. That's not what you want to see. Equity issuances, they barely issued equity, and they've done 0 buybacks. I don't like that at all. That's not a good thing for shareholders when Netflix is profitable. They are profitable, so they have no excuse as to what are you doing with that money to return value back to your shareholders. Yes, you've made movies and you keep making good movies, but you're not actually buying back shares and you're not paying a dividend. What are you doing with that cash? I don't really understand it, and that's not really a positive thing that you want to see if you're an investor, is this company that's not really putting you forward if you're an investor or even a passive investor in or a sidecar investor in Netflix in some way. And we can also see that they have a positive free cash flow. So that's a really good thing to see too. Now, if we look at a portfolio of Netflix, they actually IPO'd in June of 2002, as we can see here, but the data for this starts January 2003, and it goes until August 2021. And if you had invested $10,000 in January 2003, today you would have $7.2 million. That is such a great investment so far over, those 18 years, and you can see that 42% compound annual growth rate. That's really hard to even try to beat the market since then. That's what you want to see, and you can actually look at the total annual returns. And outside of, it looks like in 2011 was the last time Netflix really lost money. They lost money hugely in 2004 as well. Probably had something to do with Blockbuster or just they're trying to grow. But other than that, they've had some consistent growth. They're only at about 5.26% return so far through August year to date in 2021, but previously they have just had double digits like crazy. They had a losing year in 2014, but other than that, you can count on what looks like 6 or 7 good years of investing in them, so you really can't complain if you've been an investor as of late. Well, I hope you guys enjoyed this video. Like I said, please do subscribe and let me know what you think below. Thanks.